Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tags. Let's bring in our next guest. Oh, sorry about that. Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White. Let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, co-founder of LikeFolio. Thanks for joining us today, Andy.
Yeah, thanks for having me on.
All right, so we're talking Five Below. Stocks had a good run over the last year, up about 12% so far this year. Is the consumer remaining resilient in this kind of pocket or discount retailer?
Yeah, I think this is where the consumer is moving, and that is, we've really reached a situation where consumers are looking for deals. Deal discovery is a LikeFolio metric that we track across all of the consumer space, and that is absolutely popping at all-time highs. The number of people that are talking about just looking for a deal, and Five Below is one of those places that you go if you're looking for a deal, and especially if you're wanting to have a little bit of a good time while you do it. There's a lot of discovery that can happen in those stores. And at the same time, as we see this happening in the stores, for Five Below, we also see pretty good growth in its web traffic, which tells us that people are looking for stores, but also looking for things to buy from Five Below, because the consumer's wallet is, shrinking a little bit because of grocery prices and other inflationary concerns that we've seen play out over and over. So Five Below is just a natural place for people to kind of drift towards, and we think it's doing considerably better than competitors like Dollar Tree or even Dollar General at this point. The main concerns that I have for Five Below is really, the cost of the goods that they're bringing in, and overall, I think they've been very aggressive about opening new stores, and I'm worried a little bit that there might be some saturation that's happening in some markets. But overall, this is a really good company. The stock has more than doubled, or has almost doubled, I think, since last June. So it's on a good run, but we're right up against resistance levels here, so it gets a little bit tricky after such a big run. But overall, this is a great company that executes really, really well.
Andy, candy, games, and toys. What's not to love if you're a young kid going to a place like this, right? There's right near my house, there's a high traffic mall with Nordstrom Rack and TJ Maxx and all those kind of shops that do a bunch of discount work. What goes in there about 3 months ago? Five Below. So this high traffic mall just got more traffic, Andy. But now, let's face it, inflation has got to be taking its toll on some of their pricing. Do you guys have any data on this Five Beyond, how they're selling higher end products, tech, computing accessories, things like that? Any data on that yet?
Yeah, very light so far. I think it's interesting, when inflation causes a company to go from Five Below to Five Beyond, you've got a little bit of a problem with purchasing power across the board. But I would encourage people to go into one of these stores if you haven't been into one. It's kind of it's kind of a throwback in terms of you're not sure exactly what they're going to have. There's basic categories, but each time you go into one, it's something different. It's something that they were able to get very, very cheap in very large quantity and mark up, to that $5 or $10 price point. So it's a cool store that kind of gets you out of our habits of simply looking for exactly what we want on Amazon and buying it and having it delivered to our house. Is a place where you can actually discover something that you didn't need, but you're going to buy anyway.
Yeah, Andy, you're bringing me back to, I have this illusion of walking into an old Kmart when I was a kid, and it's going to smell the same way in a Five Below. But you mentioned web traffic. You had a chart on that one. That one's starting to dip a little bit. Do they rely more on the foot traffic as opposed to web traffic? And do you have an earnings score on this one?
Yeah, they do rely on foot traffic. I think that dip is just kind of natural as we've gotten past the holiday season, so we're not worried about that. That's more of a seasonal type of dip. From an earnings score perspective, we're actually, despite how much we love the company long term, we're actually a little bit bearish going into this. I think it's going to have a tough time making new highs. They ratcheted up expectations in a big way last quarter, so I think here I'm looking at Five Below as something where if we get the dip on earnings that we're expecting, could be a really good entry for a long-term type of investment.
Yeah, it's sitting right at that 50-day moving average. And you mentioned that. I mean, just at the end of last June, about $109 on the stock. So it's nearly doubled on that. Pretty good looking chart over the last 8 to 10 months here. All right, thanks to Andy Swan, co-founder of LikeFolio, for joining us, giving us data here on Five Below. Have a great day, Andy. Kev, your thoughts here on Five